Welcome to Drill Down Earnings. We have the latest quarterly results from On Semiconductor. This is the business story behind one stock on the move. We cover the 50 most important companies in technology here at Epistrophy Capital Research. I'm the chief market strategist, Cory Johnson. And On Semiconductor, when you think of this company, think of cars and think about EVs and think about the cutting edge hybrid cars and something like my fancy Jeep. Wall Street just thinks, I don't know, semiconductor, was it a beat or a miss? And it was a miss. 1.72 billion in revenues in the quarter, 95 cents in earnings per share. Just a little off Wall Street's expectations, but disappointing because the company's getting smaller, the business is getting smaller, and you wonder what's up. They're selling these expensive chips into the EV market. The problem is it's been a market downturn. The growth has been slowing in that industry, and their customers have built up a lot of inventory, and the combination of those two things has been bad news for this company. So while they try to fix things kind of in the middle part of the business, the revenue is not doing great, and the profits probably aren't going to try to do great. They're going to try to squeeze out some costs in the meantime, but it was a rough quarter for this company. So let's talk a little bit more about what this business is and how this business works, because they are definitely feeling some automotive pain with a 15% decline year over year in the revenues. So think about EVs, right? So the management of power in a car is a thing, right? It's difficult. The car needs more power, sometimes less power, sometimes all vehicles do. But electric vehicles in particular, hybrid vehicles in particular, have really dynamic needs of using power and conserving power, which makes these chips so very important. But the slowdown in EV growth, EVs are still growing as in terms of adding more vehicles to the road, and the inventory that the cars, I think the car dealers all thought, the car makers all thought they were going to build a lot more of these cars into 2024 and 2025. So they ordered a lot of parts, a lot of these chips from companies like On Semiconductor that they didn't really need. So they're still using the inventory on their shelves, and it's a problem. It's also important to know that these power semiconductors that are so critical to EVs and energy efficiency are cyclical and commoditized. And so the ability of their customers to build up inventory has just been a real problem here. And there's also been a change into silicon carbide. The hope was that cutting edge silicon carbide would be a technological advancement that would drive a lot of adoption here. But as soon as that stuff was on the market, customers ordered it, put it on the shelf, where it's continued to sit. Not great for On Semi. Silicon carbide also really interesting because it works at really high temperatures, better than traditional silicon chips. It also, the thermal conductivity is better. So it's a great product out there. Also works at higher voltages, which are so very important as we go forward and we move from things like my hybrid Jeep to the Porsches out there that work at a higher voltage. That's going to be good for this company in the long run, but in the short run, they're having issues here. So that automotive pain is important because automotive is 60% of revenues in this quarter, even as that business is shrinking. Industrial and their other business also shrinking. But the automotive business wasn't getting a lot worse. Well, their other businesses were getting a little bit worse. We'll dig into that in a little bit here. And so their profitability at 24%, worse than it was year over year basis, certainly, but maybe not as it has been in certain quarters over the course of the last couple of years. Whether it's analog or mixed signal, they're both businesses kind of doing poorly, again, declining at 18% on a year-over-year basis, while revenues are only down 15%. The numbers came out, the stock sold off about 8% after a really lousy year, down 43% in the last year. Now, the CEO was asked on the conference call, what's going on here with the mix towards silicon carbide, and why isn't that helping you so much in your average selling price, your ASP, to make up for the fewer chips that you're selling? Here's what he had to say.
The growth in silicon carbide, which is not just the growth in silicon carbide, but a mix shift even on the ASP side. A silicon carbide module is a much higher dollar content than some, for example, the discretes we used to ship more of prior. So from a unit, you can expect, unit decline, but revenue went up. So it's hard to get a baseline given how drastic our portfolio has shifted over the last even 2 to 3 years. But moving forward, our long-term view, which remains consistent, outside of the market environment today, our long-term view remains consistent, which is SAR plus, call it high to low teens. From high single digits to low teens. That's the range over SAR. So, which is what we're seeing. That, I would say, is the baseline that we are building to and the baseline we are investing to, which is both a mix shift into higher value products, especially as, for example, we start introducing Treo, which comes with a margin expansion as well towards our long-term target. So moving forward, that's how you can think about it, but it's hard to go backwards and talk about a baseline just because of the shift that we've done over the last few years.
That's just saying Cory talking about what's really going on there, why just having better technology isn't enough if you don't sell enough stuff. Cory, no relation to me, Cory Johnson, because that's his last name. Cory's my first name. That's a long story. Anyway, what's the big drill on earnings takeaway? What's the one number that tells us a whole lot? So Q4 earnings from ON Semiconductor are all about the automotive industry, about the EV industry, about the growth rate in the EV industry. And the growth rate in the EV industry is slowing. It is slowed, and their industrial business also not doing great. The result is, although their silicon carbide chips are cutting edge, they're just not selling enough of them. There's still inventory out there in automakers, and it has slowed down their growth. But there has been a slight recovery. Their automotive sales were actually up 8% on a year-over-year basis. And that is, or on a sequential basis, I should say. And that's good news for this company. There's hope that just maybe things might start to get better over the next few quarters. The company's not going to jump out there and tell us, but when you look at the numbers, you can see hints of an improvement. Could be good news over the long run for ON Semiconductor. All right, thanks for checking out Drilled on Earnings. I'm Cory Johnson. Check us out on all the socials. Subscribe to us on YouTube. We'd appreciate it.